Hey, it's Mac with PriceActionTradingSystem.com, and it is Monday. It's August 4th. This will be our chart lesson for the day. And you can see real quickly here, it was a very bullish day today. We took back everything from Friday and closed on the very high today. It was not a great trading day, honestly, because there's not a lot of setups, but it was a very nice bullish day early on. We traded up all during the overnight and then after into the regular session open, but then we just kind of went sideways. We continued to move higher, but it was a lot of sideways stuff and a lot of tight ranges and things like that. So most of your better trading came from the ranges. There just weren't a lot of setups on the rally early on. And you'll see that as we get over there. But definitely a very bullish day, and you can see we opened near the lows and closed on the highs. And I mean, that's as bullish as it gets. Um, again, we took back everything from Friday and closed higher, so much higher actually. But let's flip over to the 2,000 tick chart, and we'll take a look at that. Go through the trades, and we'll wrap this day up. But let's flip over there. Okay, you can see early on we had this two-tiered channel. It's too steep, and then we kind of folded over into this one, but we had a close outside, a move to a new high, and then we corrected for, I would say we were corrected. The high was around 9:30, and we were sideways to at least 11:30, almost noontime. So that's about 2 hours, 2.5 hours, and that's one thing that a lot of people misunderstand. Uh, After you get a break and a new high like that, sometimes you get a reversal that reverses and trends down, but sometimes you just get a correction sideways in a range like this, and that counts as a correction, and then the trend starts up again, and you can see we got a new two-tiered channel here. So you'll see that, especially on real strong trend days. You could see it to the downside. You know, you're trending down, close outside, new low, and then you trend sideways, and then you get another leg down. So don't lose sight of that and get caught up thinking that you have to get a reversal, because that doesn't always turn out to be the case. So, and you can see there's not a lot of trades today. There just wasn't anything from here to here, because you're not, all you're getting is first entries pretty much all the way up. Just no real setups. So, uh, not much you can do about that. Just sit tight and be patient. And another thing I wanted to address, somebody said something to me today. They were reading the comments in the YouTube, and one thing I wanted to make note of is, if you noticed, I never answer questions in the comment or pay attention to the comments in YouTube. It's because it's not worth your time. Don't read those. I mean, if you want to read the comments, read them. But all you're going to do is let the naysayers and the troublemakers and people that just want to stir up trouble and that don't know how to trade, that want to think they know how to trade, they're just going to discourage you. And that's what this trader said. He said, I put a lot of hard work in this, and people say you can't really do this in real time. It's easy to do after the fact, but you can't do it in real time. Well, don't believe that. I mean, there's enough people that have had success at this, that are doing this every day with success, to know that it does work. It's not just me that says it. Other people are having success with it too. There's a new copycat every day that comes out trying to teach it, and there's a reason, because it works. And so just don't listen to those people. I mean, like I said, I don't even read those comments anymore. I quit reading them and trying to answer them, because it's just a waste of time, and it's just discouraging. It discourages me from even wanting to teach it. So your best bet is to ignore that stuff. So I told that trader the same thing. Ignore those comments. Don't read them. Those are they're people that are they're haters that don't like what we do. They don't like the message I put out there. It used to be really bad. It's not nearly as bad as it used to be, but there used to be people that got mad at me because of my message, and my message is that anything you buy, any kind of indicator, any kind of software, all of that stuff is a waste of time. You're never going to make any money with it. Never. The only way to learn to trade is to read the chart, understand price movements, and become experienced at reading it and knowing when to enter. And even then, it's not 100%. If it was all 100%, I'd be saying, hey, you can trade this and do 100%. But I don't tell you that. Sure, I tell you you can get to a very high clip. You can get to 90%. We have people doing it. But nobody ever gets to 100% because you're still going to make mistakes and there's still going to be some trades that are just hard to see. But I promise you, if you study them and you understand what's going on, you'll always find a reason that every trade failed. It doesn't mean that even if you see it next time, you're not going to have a losing trade on that type of setup. And what you learn is that if a setup is not perfect, you learn to try to avoid them. And you don't get caught up in those 50-50 trades or even 75-25 trades, because that's still a 25% chance it's going to fail on you. Just skip those trades. And you can get good enough to see the ones that are almost sure things. And even then, you're still going to make a mistake. We're human. We're not infallible. You're going to make mistakes, and you're going to have a loser occasionally. But it's not the end of the world. If you don't take a huge hit, if you only take that, if you can get to an 80 or 90% clip and you can catch a runner here and there, you're going to make money. And that's just don't listen to the naysayers. That's the big part of the message I'm trying to get across to you. People that say this doesn't work anymore they're full of it. They don't know what they're talking about. This stuff works the same today as it did 25 years ago. So don't listen to that. Anybody that says you can't read it fast enough in real time, they don't know what they're talking about. Sure, not when you first start, but as you get experience and you get good at understanding it, usually that's the real problem that most people don't understand is new traders are looking for an entry on every swing. Whereas an experienced trader, we're sitting on our hands waiting on, once we went in this range, I'm only looking for a trade down here or up here, going short. And so I'm just sitting waiting on a setup at that point. And if you can't see that in real time, then you're not good enough to be trading live. It's not that hard to see. And so don't listen to these naysayers. That's all I can tell you. Anytime you listen to, and not just for my stuff, even if you don't like what we're doing here at Pat's, and you go find something else you like, don't listen to the naysayers. Listen to yourself. Listen to your inner, your inner voice or whatever, and don't listen to other people, because they don't want you to be successful. They want you to be like them. They want you to be donors and failures, because they can't do it. They don't want you to be able to do it. And because they can't do it, they don't think anybody else can do it. And it's just like anything in life. You're going to have successful people and you're going to have unsuccessful people. Not everybody's cut out to be a trader. Doesn't mean you can't learn it and can do it, but maybe it's just not your thing. Most of the people that are successful at this are like me. They eat, breathe, and sleep it, and they love this stuff. That's why I teach it, because trust me, there's not enough. I don't get enough joy from other people to make this worth my while. I do it because it's my way of giving back, and if I can change one person's life, it was worth it to me. And I know that over the years that I've been teaching this, I've changed a lot of people's lives. They come and tell me. So I know, so that makes it worth it while to me. Plus it gives me, I'm a workaholic. I have to be doing something constantly. I have to always be involved in something. So, and trading is a lonely, lonely profession. Everybody wants to do a Discord. They want to do a live trading room. All that stuff's a waste of your time. You're not going to learn anything from those people. They're going to bring you down and slow you down. Just accept it. Trading is a lonely profession, and that's one of the main things that got me to teaching, because it takes away from the boredom and the loneliness, and I get to interact with people, but I don't listen to anybody else. I only put out my message and my message only, and people try to send me feedback, and I thank you for sending me feedback, but most of it I don't listen to, because I found what works, and I'm going to teach what I think works, and simple as that. And if somebody can tweak it here and there and it works for them, that's great. because there's always going to be personality quirks that some things work for and some things don't. Some people like to go for huge runners and get, they really want to trade to not become runners, but to become swing traders. I can't be. I tried being a swing trader. I don't have the patience. I don't have the. I can't watch my account have 5,000 in it and then back up and only have or have negative money to go ahead and get 10,000. I'd rather take my 5,000 and look for another trade and make another 5,000 instead of trying to get 10,000 all in one trade. But some people don't like to get in and out, and they'd rather buy into one trade and stay with it. So if your personality allows for that, do it. But mine doesn't. I can't stand to see $5,000 in my account and then watch it evaporate and turn into a loser, even if it did eventually go to a $10,000 profit. The, the day I started to make money, this was the problem. I would get in here and I would trade over and over. I'd see $500, $1,000, $1,500 in my account, and then next thing you know, it was a losing trade. And I'm like, if I just would have taken profits, I'd be in the money. And so I told myself, I'm going to start scalping and just take some money every trade. And then I'll try to keep a couple of them for runners. And the day I started doing that was the day I went profitable. And it only got better from there. But I learned to always take a profit. This is not a get rich quick scheme. If you try to do that, you're gonna fail because the market's too, it goes up and down, up and down, up and down. All we want to do is find the way it's going and get part of it. And if you can do that every day, it's like it's a boring job. It becomes a boring job, but you can make a lot of money. And over time you can get rich because it adds up. But it's not a get quick rich scheme. So if you treat it like that, you're going to be a failure. But anyway, I didn't mean to get off on a deep tangent, but I did want to tell you just ignore the naysayers. Stay away from trading forums. I don't even like our forum. It took me forever to finally accept that I got to have a forum because people just, it's the easiest way for people to ask questions and things like that because I can't do it by email anymore. And I didn't shut everybody off because I don't want to answer emails. It's just too much. And so, and it being a forum, we can control the message. If somebody puts something in there that we don't agree with, I can delete it or take it out. Not that I do that very often, but I can if necessary. If somebody comes in there and starts stirring up trouble, I can kick them out. And I will. If you come there to learn and to study, you'll learn something. If you come there to stir up trouble, you won't be around very long. And if you don't know it, you can join up for free for 30 days now, and join anytime you want. And you get a free 30 days. If you like it, you can hang around. If not, you don't have to come back. Okay, I had a small interruption there, but I've talked about that enough. Let's get to the trades. It was a good day to have a little side conversation because there's not a lot of trades here, but you can clearly see the trend working up, and there's no setups here. I marked this early one here right after 8:30. Notice you got a double bottom, so you got a new low, and then you get a first entry, and it turns down again a second entry. And so you might treat that like a failure. It's going to act like a trap, and you can see how it shot up real fast because it trapped people to the short side. And that's what those things do. And you can see it's all bouncing right off that trend line. This is a spiking channel up. That's the way I saw it. Now, there is another channel here, too. Somebody will probably come back and say, well, this is the way I had it. What's wrong with that? Nothing. That's your spike up. But it turns out to be a spiking channel. And this is correct, too. But it just keeps going in another channel, just like this is a flatter channel. And then it goes sideways. And then it starts a new channel. So if you had it like this early on, you're right. There's nothing wrong with that. And there's other trends in here within these trends. So, and there's congestion in here within that trend. I don't mark everything on this chart because it gets too messy. But there's stuff here like that right there. And that's why you can't go long in there because there's just no room to. I mean, you might have on that one, but it's just the first entry, so you're waiting on the second entry, which comes right here, and then it looks too congested. And then this one is the reversal, a failed second entry short reversal right at the key entry point. Um, I marked it green because it's right into the highs, and so that makes that one dangerous. But a lot of times these are going to act as a trap, and even if you don't have much room there, because that's what happened. You hit the resistance, pulled back, and probably a bunch of shorts jumped in, and then they reverse it again, and you see how it shoots up. All those shorts had to get out. So that's what happened there. And then now this is a very strong trend, and I didn't mark any trades up in this, but if you've ever heard me talk about these, maybe about the time it got to here, you could tell this was a fairly strong trend, a real tight, strong trend up in a real tight channel. Any signal bar that comes back to the key entry point, you just about can enter on. There's one. You see, it would have been a good move. This was one. It would have been a good move. But it's still a little early there. But by the time it gets to here, it's obvious. And then by this time, it was too congested. So you can clearly see the congestion across there. And so you wouldn't want to enter in that one right there. That looks like a doji almost anyway. It does close probably high enough, but you see the resistance across there. So just sit tight on that one. And somebody asked me about a trade that led to that other conversation we just had earlier. It was a trade of something similar to this, and it was a higher low, and there wasn't room to scalp out from that higher low, and that trade failed. And I told him, usually on a setup like that, you want to wait on a higher low. Well, that higher low failed, but it was right into the highs of the previous swing, and the rules say don't go long if there's not room to scalp. Don't never enter a trade if there's not room to scalp out, and that would have kept you out of that trade. It was kind of congested. There was a few other reasons too that were obvious, but um, anyway, that's what led to the other conversation because somebody told them, well, you couldn't see all that in real time. Well, yeah, you can. It's not hard to see that congestion across there. It's not hard to see that that's right into the highs. So anyway, you continue up, and this is just the first entry, first entry, first entry. Now there's a second entry here, but again, it's sideways. We're not back to any key entry point. There's no reason to enter there. And this is not really a high or low, but it looks similar, but there's no setup there either. It's just a trap. And it almost was worth going short there, but you're still in this strong uptrend, so I wouldn't take a short there into that EMA. And then it bounces here, and then there's a higher low here. But it's moved too far. It's not a good setup, really. If you took it, it would have worked, but notice it doesn't even trigger on the next bar. Then you're just kind of stuck in this another sideways action here. You notice you got a break and a new high, and you're just working sideways. You might argue there's a triple test here, but I don't see it because each one of these swings is a little different. So I don't think you'd want to go short there yet. But when you get a triple test down here, I think it's worth going long. There's plenty of room back to these highs, and you can see how it rockets up. And you get a first entry, and then it turns higher and fails and turns down. You get a second entry, and if there's room to scalp out there before these lows, take that short. And then that's not a good enough signal bar. And then you fail out the bottom here, and I marked that. Notice it broke lower and then turned up. It's just the first entry because this is a new swing high here. This was the last swing high, so that's a higher one. And so that's just the first entry, but it broke lower and failed and turned up on an engulfing bar. Now, normally I tell most of you, 95% of you should avoid engulfing bars. That was the other thing with the trade the guy asked me about. It was an engulfing bar. And so most of you just avoid engulfing bars because you can lose on them. They're complicated. The only way I'd probably take this trade was on the engulfing bar, though. And that's for more experienced traders. Otherwise, if you see an engulfing bar, just skip it till you're good enough to understand them. And if you take a loser on one, you probably didn't understand it. You might have thought you were good enough, but you weren't. So that was the other thing with that trade. The trader asked me about it was an engulfing bar. And so that would have been enough reason to not trade it right there. But anyway, it breaks lower, fails, turns up. Now I wouldn't go long here. One tick above that, I'd only go long on the engulfing bar. You're too close to the EMA there, and it could turn back down. But you do have a trend coming down, close outside, actually a two-legged correction, then another leg down. So that's a two-legged move with a two-legged move in the middle. You're likely to get two legs and then something else, and that's another move, and then that's exactly what happened there. And that turns out to be a good move up. And then you fell out the upside. Maybe you go short there again. You're always better off to wait on the lower high, just like down here. You're better off to wait on the higher low, which you could actually call that a higher low right there. The problem is you got this trend channel working down, and you don't have a new low yet. You do get a close outside here, but no new lows. So I think that's risky. Um, I would sit tight, but maybe you go long on that one. And then you're just chopping sideways. And here's another one. You just don't want to go long into that last swing without room to get out, even though you got a good signal bar right there. You got a first entry, second entry, and then you're just working sideways here. So if you had enough room, if you weren't getting resistance on that midline and it was right off this low with plenty of room to get out, I'd say go long right there. Just like this one, that's a good signal bar, but it's right into that midline. And look how many times we failed there. 1, 2, 3, 4, 5, 6. We had 6 bars in a row. It doesn't matter. It ends up going higher, but you can't risk that. So don't go long without room to get out into previous resistance. That's the rule. That's a rule. You should never, that's a rule you should never try to skirt around. And you'll miss some trades, just like right here, you missed a good move up. But the next time, like right here, you didn't take a loss. So it'll save you from a lot of losing trades. That signal bar is not good enough to go short. You might say, okay, there's a lower high here, but it's moved too far down. You don't want to be going, you don't want to enter on the midline of a tight range like that. You want to enter up here at the highs. You want to go short or long at the lows. Now, this one was tempting. But again, you could argue for that one to be green. But I'd wait on a lower high, and you don't get one. You can't go low. You can't take either of these. You're not back to the highs on this one. But now you get 2 legs up, and you turn down right off the resistance with a nice bearish bar. So that's it's technically not a second entry, but still you're playing the range rules, and there's a good setup, and look at it go. Then you get another one down here. If this would have closed outside the range, I'd say wait on a higher low, but it closes back inside, so just take that one. And you do get this low down here. I don't think that's a new low, but I think that because it closes inside, I think you're all right on that one. And then, now that's a higher low, but here's your signal bar, so you can't take that one. And it takes off. You do get a close outside new high, but signal bar is not good enough. You can't trade that as a lower high. That's just a first entry. And then you're just chopping sideways. I don't see anything to go long or short there that I would risk. Breaks out and you get in another one up here. Now this one breaks out and turns back down and closes inside. I think that's good enough to go short right there. I did mark it green just because you're in an uptrend. But each time we've gone into these ranges, you could have traded it either way. And not good enough. Then we're turning down. This one was tempting, but it's just a first entry. See if you get a second entry or a higher low. There's a higher low, but it's moved too far. It's not in other words, it's not a tradable higher low. It needs to be closer down here. And that was another thing with the trader. The other trader asked me about it had moved. It was actually, you were going long above the EMA. It wasn't as big a move as this one, but it still had moved a little bit far for a higher low. And then there's 2 legs back here, but notice there's not room to scalp out. Now you might consider that we already broke out and probably cleaned a lot of that out, and you might say, okay, I want to take this trade. Um, you might even argue it's a triple test. So if you did that and took it, maybe, but it could. Well, actually, it didn't trigger on the next trade, so no, you still wouldn't take that because you don't want to take that inside bar. So if it would have broke right above that bar, maybe you take it. But you get two legs up and it turns down. There's your signal bar. You can't trade that. This one's back inside, but again, it doesn't break lower on the next bar. And then we're bouncing down here again. Again, that's a fairly decent bar, but we're right into the midline, and the last bar didn't go higher. And I mean, that's a possibility. You might argue for that one to be green. I'm not crazy about it. That one is too much stem. No setup there. But here you do get a lower high here, but you don't have a new high in place. Notice the channel working up, close outside, and it tries two legs and fails. So that's a second entry short and a triple test up here. So I like that one. You can go short right there. And that takes us into 230. But if anybody tells you can't see that in real time because it moves too fast, they don't know what they're talking about. Maybe they can't see it because they're not skilled enough. They've never worked on it. But just don't let people, there's so many haters out there and so many naysayers. And they make my job more difficult. They make learning more difficult. There's just negative people out there. And if they can't do something, nobody else can do it. And so don't listen to them. Turn all that mess off. Don't read don't read their comments, or if you're one of those people that you can't read something and ignore it, don't read it. Because I promise you, you're going to read a lot of negativity and a lot of junk. And it's just detrimental to your trading. It's just going to slow you down and put doubts in your head. And then if you're not confident in what you're doing, you can't be a trader. Traders are confident. When you get good at this, you'll get confident. And if you don't have confidence, you're probably never going to succeed. I mean, I hear it all the time. I can get on the simulator and I can not have a loser. I can have 50 winners. But if I go live, I can't pull the trigger. And then I watch all these trades go by, and then I finally say, okay, the next one I'm taking, and then it's a loser, and I watch 10 winners in a row. Well, that's what a lack of confidence will do to you, and that's what a lot of trading is mental. And so even if you understand the strategy and know it, you need lots and lots and lots of screen time trading live data. So, you can't get too much sim trading. You can't do it because you need as much time trading. You can't afford to do this live. You don't have enough money. Even if you got $1 million account, you don't have enough money to learn to trade live. You got to learn on the simulator. Otherwise, you'll go broke. And you can't afford that. Our error of margin is so thin. And so we have to get it right. But if you're, at the same time, we're only trying to get 4 ticks. 4 ticks. And if you learn to enter in the right places, if you go look where all the big moves are, where probably most of my arrows are at, you will see that, if you can learn to spot those and enter there, you're going to get a move, and you're going to easily get 4 ticks, and you're not going to take much heat. Every now and then a trade will take some heat and still be a winner, but most of the time it's not even going to take any heat. You're going to enter, it's going to trigger your trade, and you're going to be out pretty quickly. And if you're trying to get a runner, hopefully you can catch a runner. But if you're moving your stop to break even on your runner, you're going to get stopped out a lot on that too. But occasionally you'll catch one, and when you do, it'll pay off for you. So anyway, this is 30-minute chart lesson, and we only had like 7 or 8 trades here, so I apologize. But I think it was important stuff. Hopefully some of you needed to hear that or wanted to hear that, and the rest of you didn't. I apologize for you having to listen to all of it. But anyway, It's a necessary evil in this business, and I mean I hear that a lot. I haven't heard it as much lately, but I do hear it a lot. That you can't do this. This doesn't work. You can't read this in real time. You just anybody can go after the fact and mark the chart, but they can't. I mean, yeah, maybe they can go and say, okay, you should have entered here, you should everywhere there was a move, but can they explain why? Probably not. They don't understand it. And so it's not as easy to market even after the fact as people that, but that's what helps you to get better at this, to study your chart and find the trades even after the. One of the reasons I started doing this chart lesson years and years ago was it forces me to do it, to study the chart at the end of every day. I have to go back and study it. And it was good for my own trading. I still learn stuff today by doing this. Always study your chart and study your trades at the end of every day. Even if you're profitable and have nothing but winners, study your chart. It's helpful. And obviously, if you're sitting here watching it print in real time and looking for trades, you're studying it in real time as it prints, and that's helpful too. And that's the part people don't understand. You can learn the strategy in 6 months to a year, but you don't have the experience of understanding what prices are doing as they print in real time. The market, uh, this strategy never really changes. What we do works because price structure and price movements never change. Now they get faster, they get slower, they get more volatile, they get the volumes increases, it reduces. So there's that part of the changes, but the strategy itself works the same, and the price structure works the same, and it never changes. It speeds up and it slows down, and you get more volume and less volume. But really, the strategy doesn't quit working because it was 25 years old. So anybody tells you that, don't listen to them. Anybody tells you you can't read this stuff in real time, don't listen to them. Unless you want to get distracted and discouraged, don't listen to them. They don't know what they're talking about. Just because they can't do it doesn't mean other people can't and that you can't. Only, again, so much of trading is mental. So don't let somebody else get in your mind. Don't let somebody's dumb idea rattle around in your mind and mess you up. Because that happens, trust me. It's hard enough to stay focused and to learn this stuff and to get right mentally on your own without somebody else's dumb ideas rattling around in your brain. And that's why I don't like uh, Discord and live trading rooms. And I don't know if anybody that's ever done any of those that was successful. Not, I don't. I mean, maybe I'm not saying there's not any out there, but I don't know any that were successful. And I've had a lot of people come to me and say, "I'm going to do a Discord. We really need this Discord." But they never last. They always come back and say, "Yeah, you were right." Man, that turned out to be a disaster. It just doesn't work. There's too many problems, troublemakers, and you can't learn. This just accept the fact that trading is a lonely, boring profession. If you're here for the excitement, you'd be better off to go to Vegas or go to some gambling destination because you'll get some excitement there, and you'll have better odds of winning there with that excitement. But if you're coming here for excitement, you're destined to fail. I can promise you, because there's a lot of people that do that. They come here for the excitement. Trading is exciting, winning is exciting. But when you do this professionally and you become good enough to make a living at it, it gets boring, super boring. Yeah, it's fun when you first start winning because you're doing something you weren't sure you were ever going to be able to do, and you're making money that you may not have ever made before. So that's exciting. But over time, that will get old. Money's not the answer to everything either. So just keep that in mind. But anyway, I'm going to wrap it up. We'll be back again to do it tomorrow. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.